Welcome to Marie's Sense and Sensibility. Today we're exploring the basics of financial statements, essential tools for anyone looking to understand a business's financial health. First up, let's talk about the balance sheet. Think of it as a snapshot of what a company owns and owes at a specific point in time. On one side, you've got assets, things like cash, inventory, and property. On the other side, you have liabilities and equity. Liabilities are what the company owes, like loans and unpaid bills. Equity, well, that's what's left over for the shareholders after settling all debts. Imagine your own finances, your savings, your debts, and whatever's left after subtracting one from the other. That's equity. Next, we've got the income statement. This one's all about performance over a period of time, like a report card for how the business did. It starts with revenues, money coming in from sales and services. Then, we subtract expenses, costs like rent, wages, and utilities. What's left is the net income, or profit. If you've ever wondered whether a business is making money or burning through cash, this is where you look. Finally, let's look at the cash flow statement. This one tracks the flow of cash in and out of the business. It's divided into 3 sections: operating activities, investing activities, and financing activities. Operating activities show cash generated from day-to-day operations. Investing activities track money spent on investments like equipment or property. And financing activities reveal cash movements from borrowing or repaying loans, and transactions with shareholders. Why does this matter? Because a company could be profitable on paper, but still run out of cash. The cash flow statement tells you if the business can cover its bills and stay afloat. So, to recap, the balance sheet shows what a company owns and owes at a given time. The income statement details performance over a period, and the cash flow statement highlights the flow of cash. Understanding these 3 financial statements gives you a clear picture of a company's financial health. Whether you're an investor, a business owner, or just curious, knowing how to read these documents is super valuable. I hope this breakdown has made financial statements a little less intimidating and a lot more understandable. Keep those questions coming in the comments below, and don't forget to like and subscribe for more sense and sensibility. Thanks for watching.